What happened in March? Well, we continue to see quite stable market conditions. There is a lot healthy level of new properties on the market and coming to the market accompanied by healthy buyer appetite. The drop in the cash rate by the RBA of 25 basis points didn't cause a material impact in the marketplace, which we anticipated. There was an initial spike in buyer sentiment, which we saw with an uplift of the buyers out and about inspecting open homes. However, it didn't correlate to an uplift in buyer making offers and bidding at the auction. This was pretty well expected as the 25 basis point has more of an impact on sentiment than real borrowing power, and I think we'll need to see if a drop a few more times, it will have a real impact on the driving prices up. The key themes I'm seeing in the marketplace right now is that there is a gap between vendors' expectations and buyers' expectations. I think we have gotten used to incredible selling conditions which we really kicked off in 2021, where we had higher fear of missing out and lots of buyers competing over the same property, pushing prices above what buyers, vendors and even agents thought that it would sell for. Ever since rates started rising again, we have returned to the normality and the gap between vendors' expectations and buyers' expectations has grown. In today's market, we are only seeing really one or two buyers engaged on most properties. So it's incredibly important to have a strategic sales strategy that gets accurate pricing feedback before marketing it to the public to engage the right buyers that you can then work with and negotiate the best price. Heading into April, there are some headwinds you need to be aware of if you are a buyer or a seller, and then that there is Easter holidays, Anzac Day, school holidays, and the upcoming election. Now, April always does tend to be a slower month because people will go on holiday, put their buying and selling decisions on hold for a bit, and this is going to be exacerbated by upcoming election. So it's something to be cautious of but not alarmed by, because the transactions definitely still to happen and the educated participants can get a great purchase or sale in the coming months. And the reason for this is because we know based off the 2019 and 2022 federal election that we saw a boost in property prices immediately following the election up to 10%. So it's a great chance to potentially buy a property before prices go up or upgrade your asset class and ride up that capital appreciation. What happened in our core suburbs? March for Team Nike, we listed 31 properties and sold 16. Achieving a total transactions over $17.7 million. We had an auction clearance rate of 85%. Throughout the month, we engaged with 860 buyers across 151 open homes. Our standout properties for the month was 103 Darcy Road and 58 Killeen Street, both in Wentworthville. 103 Darcy Road is a 5-bedroom duplex and that got sold for $1,745,000, which was a street record for a duplex. It was on the market just for 22 days, and during that campaign, we met 122 buyers, 32 of them who requested the copy of the contract, and on the day we had 10 registered bidders who made 17 competitive bids. 58 Killeen Street is a 5-bedroom home that got sold for a street record of $2,305,000, which was $305,000 above the vendor's written reserve. The property was on the market there for 24 days, and during that campaign, we met 91 buyers, issued 23 contracts, and on the day we had 6 registered bidders who made 36 bids in total. If you have any questions about how you can best navigate the current market, myself or anyone from our team would love to help.